All right, hey everyone, Mark here, Mark P Markets. Thanks for joining me for another GreenBridge Investing market analysis. So I'm not simulcasting today on TradingView, so I can be a little bit more like myself. So thank you all for joining me. Now, in today's session, of course, I'm going to go over my stuff real quick: Bitcoin, stock market, gold, because a lot going on there, and you should be aware of these things, especially if you're in other instruments like stocks or whatever. All right, so if you're new, hey, put your symbol or your market in the chat, so once I get to the chat portion, I can go through the charts you want to see. Okay, I want to try to answer everyone's questions. All right, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you're new to GreenBridge, hey, please press the like button if you like the video that I'm doing here. Also, register for the channel here if you'd like to get email notifications from YouTube every time we stream. And check out our website. All the information about GreenBridge and our swing trade signal service is in the description portion below the video. Just click on Show More, and you'll see everything there with the links. Okay, so let's talk about Bitcoin first. All right, now, we sent out those swing trades, as you guys know. Off of this area here, the 48.5 area. I know Andrew closed one of them, but the other one obviously doing well. And then I sent out Uniswap and ChainLink as a result, looking for a move like this in Bitcoin. Okay, now Bitcoin is testing the 57K peak. Okay, that's cool. Now people are starting to ask, oh, should I buy now? No, you shouldn't buy now. If you haven't bought, you shouldn't buy at the 57K peak. Okay, especially for a short-term oriented trade. You're buying right into resistance. If you're buying for inventory, okay, but you take a smaller than usual bite because this can fail here. Now, my next inflection point is 66.5 or around there, 66 area, which it can get there if we follow through. But at this moment, we have nothing but fooling around here at what's the closing price, 57.130, whatever. I mean, this thing can change. We have a number of hours before it closes, and it can change overnight as well. Now, real quick, if we take a look at Link USD, not following through, okay? Went to target one, where, this thing should be in the middle of that target zone right now with Bitcoin doing what it's doing. This is a red flag, okay? This is acting relatively weak. Not what you want to see. Now, we have a pin bar today. Okay, that's cool. So maybe if Bitcoin breaks out, you'll get that next leg higher, but definitely don't like to see this. I mean, we've reduced our risk by 1/3, or if you're in it, you should have reduced your risk by 1/3, and you see what happens from there. I wouldn't make any adjustments at this point. A lot of times, it's really not worthwhile to make adjustments unless something is painfully clear, because usually you're just interfering with something that's going to work. Yeah, sometimes it stops out, but I find that whenever I try to second guess or I start interfering with stuff, it's usually better off just leaving it alone and let the market do its job. Okay, so like Uniswap, again, we get the same type of pin bar, so maybe they'll have their next leg higher. This one performed much better. I mean, we have a high here at 34.92, so basically it touched target 3. Hopefully some people took profit in that area, and the next target here is 43. So if this higher low holds, perhaps we'll get that higher high, at least reach target 2. Again, we'll need Bitcoin to follow through. What if Bitcoin double tops or produces a failed high, which at this point it's very vulnerable. It can. So I'm not going to sit here, although I am bullish on Bitcoin, I'm not going to sit here and have an opinion and say, oh yeah, it's definitely going to 66K, because I know that there's a high probability that it can change in this area right here. Okay? People don't realize that. You have to be ahead of the market. You can't go by what you see in front of you, because that's old news. You have to anticipate, right? So I'm looking for that. Now, I could be wrong. We may not fail here, and we may go through. But the market has to prove that. Now, if we pull back off of these areas, I'm looking for obviously a test of 50K, back to that 47K support area, this area here, right? That would be basically going back inside of this range. This range may be the beginning of a broad wave 4, but there's nothing that proves that yet. If it's not a broad wave 4, then it could be a wave 4 within the wave 3, the broader wave 3, and that next leg higher could be the 5 of it. It's tough with Elliott waves sometimes. You have to relabel or readjust. That's why you don't want to get married to the opinion. All right, if we take out 37K, then I will believe that we are in the broad wave for it, and I would expect more of a behavior like we've seen in gold. Okay, so that's Bitcoin real quick, and I covered a couple of those alts. Again, if you guys have any questions about any particular alt, please share it in the chat, and make sure you put USD after it, please. Otherwise, I'll talk about the wrong symbol for like half a day. All right, so let's take a look now at the stock market. NASDAQ 100. Look at this. So this thing's been very tricky. About a week ago, this thing was selling off, right? And everyone was saying, oh, interest rates, oh, the bond market, interest rates are going higher, right? And look where we are now. People were getting nervous. People were, should I get out of this? Should I get out of that? You know, whatever. Should I get short? No, you don't short lows. You don't short lows. Why not shorting this low? I mean, at the time, it looked pretty bad, right? But look where you are on the bigger picture. It's a support area, and it's a potential failed low region, which is marked by this purple rectangle here. Okay, this one. Let me erase this one so it's not confusing. So this one. And this is not a region where you want to be shorting. All right, if you want to short something, you want to short a resistance. And I made sure I put that in the chat room. Do not short these things at the lows. Now, I said also we may get a pop, and we'll see how far it goes. Yesterday was a tricky candle because we had this bearish pin bar situation. This is why you can't make judgments too early. Even if it closes, you know, weak, like the S&P was strong, Dow was strong, even the Russell was strong, and this thing gave us a bearish pin bar, but it never took out the low. So getting short on something like this or overreacting is usually, again, a bad idea. You have to see how the next day goes. Does it take out the low? Well, we didn't touch yesterday's low. Yesterday's low was 12,706. Today's low was 12,726. So didn't touch it, right? This thing is strong, and now it's closing strong. So I would expect this momentum to continue. But here's the thing. This is not a place to be excited or, okay, next leg higher. You know, the stock market's safe. Let's all pile in. No. Let's take a look at the S&P. So the S&P had this spectacular move, all right? Again, starting with that higher low, which we pointed out. I made sure I pointed that out in the chat room the other day. I said, look, you know, this is not a place to short. If it establishes that higher low, it can go higher and at least go for the high. That's what it's doing now, all right? And it's going there in a straight line. So in this situation, the NASDAQ and S&P have been mixed as far as their relationship. The S&P has been strong. The NASDAQ has been showing weakness. That's unusual, okay? They should be pretty much moving in tandem. They should be moving together. Now, today, you know, they're sort of back in line, but why isn't the NASDAQ up here, relatively speaking, okay? The NASDAQ's not testing its highs. Many stocks in the NASDAQ, like look at Square. Yeah, nice pop. Everyone's all excited. That's a lower high, all right? Going right into resistance. What's another one? Amazon. There's nothing impressive about that. That's a lower high, potentially. That's not a higher high. That's not even at the high. So that's a problem. What about Facebook? Okay, so Facebook is just basically getting toward its range high. So you have a higher low, but again, nothing impressive here. Nothing. So this is a red flag. Now, other ones. What were some other ones I was looking at? Okay, how about like the pot stocks? Look at something like CGC. I mean, this is horrible. But this is not highly correlated. So okay, fine. What's another one that's highly correlated? AMD. Look at this. Okay, lower high potentially. Now, yeah, it may go a little higher, but look how much work. Look how much it has to go before it starts getting to meaningful progress. It's got to do all this. All right, so that's not good. That is not a sign of strength. So what this does is it lures lots of people in, people that are not aware. Okay, they're only looking at their phone on their Robinhood thing. Oh, look, AMD is up $4 today. I'm going to buy some because it's, you know, the market's coming back. Right, you're buying right into a potential resistance. So in this situation, it really, really helps to think like a contrarian. All right, and what I'd be looking for, and I know DJ's probably ahead of me on this, I'd be looking for puts in something like AMD. You know, why? Well, the NASDAQ puts are going to be expensive, right? These are going to be expensive, the Qs, because I want to buy time, right? And I want to buy out of the money. So in something like this, you know, I don't want to pay really high premiums. So something like AMD, a stock, which we usually don't do this with, but if this is really tied closely to the NASDAQ, then I may be able to buy puts and bet on a NASDAQ correction over, I'm talking like 6 months now. I'm not even talking 3 months. I'm talking 6 months, right? I would buy that much time in case this market does find a higher low and keep going. But this is the time to be looking, at least, okay? Looking, because here's what the S&P can do. And this is what you have to realize. You know, people look at this, and you have to understand how we are, you know, how our sensory perception is how it works. This is a really big part of trading that no one ever talks about. But, you know, we process stuff by basically like sensory, what we touch, what we feel, what we hear, you know, what we see, that kind of stuff. Well, we can't actually see what's going on behind these candles, right? We just see, oh, it's a strong market. And then that gets confirmed when you turn on the TV and you hear some news. Oh, today the S&P is back to its all-time highs and we're going up forever and blah, blah, blah. Buy Bitcoin. Okay? So you see that stuff and it confirms what you see. But this could be very misleading. Markets are abstract and highly random. They're derivative. The price that we see is derivative of lots of people putting in buy orders and sell orders, whether it's an active order like a market order or a passive order like a limit order. We can't see those orders. Now some people say, oh, but I got the order book. Yeah, I can see them. No, you can't see them. Okay? Only the broker can see those on their own book because they're making the book, not you. So, you know, and plus you can hide stuff, right? So if you go pull up a level 2 NASDAQ quote, or you pull up, you know, a book, you know, a ledger like they claim like on some of these things like Coinbase. Oh, I'm looking at the order book. That's not accurate at all. You don't know what's really going on. So my point is that information is just not, it's meaningless. So you have to think ahead of the market and you have to look at potential area where it can fail. This is where it can fail. This is what probability says, where it can fail. What would make it fail? I don't know, some news. Right? I don't know what will make it fail, but that's a location where it can fail. Just like a location like this here is where it can reverse for a long, high probability, okay? And it reversed. So that's why I would not be all excited at these levels, and I would be thinking more like a bear. But I emphasize thinking, not taking short positions because it could be too early. All right, so those are those two things there. Real quick, I wanted to talk about TLRY. It was our trade of the week. And look, I mean, the trade went into play if you put in a limit order after I sent this thing out yesterday. Today this thing closed at $27, or it didn't close yet. It's going to close. It's up at 27.18. Not bad, up 3 points. We're on from 26, or that's where the buy stop was. So this blue box here represents the target zone. We'll see how this thing does. I liked TLRY because it's typically a fast mover because once it pops up on all the day trader radars, it goes berserk, as you can see previously. I think it has a higher short float, and that's, you know, we like those for short-term pops. Okay. Anyway, so that's TLRY. Now I want to talk about gold. And I see a question about the dollar, so this is also going to relate to the dollar. Look at gold. So gold has been having a tough time. Gold has not been acting in a logical way, but what market does act logical? With all this inflationary stuff going on, gold should be doing much better than it's doing. But okay, whatever. This is why you can't sit there and rely on opinions. You can't sit there and think that you're in control. Okay, that's what is an opinion anyway? An opinion is something where it's like, oh, well, if this, then that. So it gives you a sense of control. Well, I know what I'm doing. Well, I know what should happen. Right, but you don't. There is no such thing. It's an illusion. So in this type of situation, you have to look at levels, you have to look at risk, and you have to look at the bigger picture. We've been piling into this, or we've been buying inventory in the gold mining stocks, took some pain, and now gold is trying to reverse. I've been staying away from the swing trades. For one, there haven't been any good swing trade signals in this thing, but look where we are now with gold. All right, so we popped up a bit, which is a good start, and now we have a bearish pin bar. So if I was a day trader in gold, or if I was willing to, short gold, which I'm not at these levels, this would be a signal to go short, possibly, if we took out the low. Now, in this situation, why would I not do that? I mean, gold has been weak, and if you look at like a 1 hour chart or a 4 hour chart, I'm sure many gurus will tell you that gold is in a bearish trend. But I'm not playing gold that way, okay? I'm looking at the bigger picture, and gold is not in a bearish trend. It's in a bullish trend, and the bigger picture carries more weight than a small time frame. So, in this situation, I'm looking for the higher low. Okay, so yeah, we got the bearish pin bar. Maybe we get the higher low. That's when I'll be looking for a swing trade. Okay. Also, for those that have not entered into gold, for one, hopefully you've taken some small bites over the recent couple of days. Right? I know many of you are all in like I am, so I'm not buying anymore, and it never went to my extreme price. I have Wheaton Precious Metals, and I have an average price of like $41 or something like that, and I'm still in the red here, but it's coming back, so that's cool. That's why, when I'm all in, doesn't matter how much WPM, it doesn't matter if WPM goes to 25. I'm all in, and it's not gonna cause a lot of stress for me because I've sized my entire investment in advance, right? And it's all part of the plan. So I'm holding a certain number of shares, and that's all I'm going to hold. If it keeps going lower and lower and lower, I'm not going to continue to add, okay? And once it starts pushing the higher parts of the range, if gold can start pushing 1900, 1950, 2000, that's when I'll want to average out. All right, so that's all the stuff that I wanted to cover real quick. 15 minutes, just over 15 minutes in. So let's get to the chat because I do want to spend more time on the chat. And I thank you all for your participation and your questions. All right, so let's take a look. What do we got? Gabriel, okay, no problem, no problem. Kamal, notifications are working. Okay, cool. Friend, what are your thoughts on, Dogcoin? I'm curious what an experienced trader thinks about an asset in the mind of, in the what? Hold on. In the mind of people has started becoming the proxy for Elon Musk's empire. Okay, so that's an interesting question, Fran. Here's the thing. When something like that gets into that type of status, right, where it's pretty much it's going to be a lot of hype, there's going to be a lot of drama around it with that type of thing. The chart, the patterns that we see on the chart, especially since it's an altcoin, and it really should be dependent on Bitcoin, the price action is going to be less reliable. The chart patterns are going to be less reliable. So if everyone thinks it's a sure thing, like, oh yeah, it's got to go higher if Elon Musk is blah, 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 I'm not that interested in it. Because if it's obvious like that and everyone knows about it and everyone's talking about it, it's usually a bad opportunity. It's usually not good, because good opportunities are ones that no one knows about, or ones that are not obvious, okay? Not obvious. So if you read about it like in the New York Times, or you read about it in some public place where everyone pretty much sees the same thing, that's not usually where opportunities appear. They're usually hidden, and they're usually, like I said, they're a lot of times they look bad. They don't look good. Usually they're like pushing lows, or their charts look horrible. A lot of times that's where opportunities come from, good ones anyway. Okay, because the herd isn't involved. All right, so that's what I think of that. I usually stay, that's why I don't even bother looking at it. Okay, DJ, hey, cool, good to see you. Anthony, yeah, right. Hey, DJ, SPY trying to print the pin bar. Do you think getting some UVXY in the money calls 2 months away are good play or bad? Okay, yeah, so DJ, let's take a look. That UVXY, I've been thinking about UVXY, which is the, for people that don't know, it's the ProShares Ultra Short VIX, which means it's a bet. If you buy the UVXY, or you buy options on the UVXY, and you're looking to buy in the money calls, that means you're betting on if this thing spikes, that means the market, the S&P in particular, is pulling back. Because if the S&P pulls back hard, the VIX goes higher. It usually spikes. The UVXY is a play on the VIX. So you're betting on a spike, or a sell-off, or a sharp correction in the S&P. Well, here's the thing with this. These instruments, as DJ, as you know, the theta decay is very high. So that's why I'm not going to do the calls on this one, because I had some calls, as you know, and I had to take a loss on them. Good thing I got out because they're almost worthless now. But I had to take a loss on them, and the market went my way. Okay, the S&P sold off, just not fast enough. That was the problem. I bought March calls in January. I had one opportunity to take some money off the table. I didn't take the money. And since then, the calls just kept losing more and more value, even though the S&P started to go my way. So I'm not, I'm not too crazy about that. You're better off buying the shares outright, in my opinion, than dealing with the theta decay. Also, if you're going to do it with the UVXY, if you're going to do the calls, I would buy more than 3 months, because all you need, right, is this S&P just to fool around, right? Like, look where the S&P is now. So let me show you this here. This situation inside of here, see all this garbage right in here? That's all wasting time. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 days or 2 weeks of wasting time. And with 3 months, you can't afford to waste 2 weeks. I mean, and this thing was going in my direction. Okay, as you can see, there's some nice red bars there, and my UVXY calls went nowhere. So what you need is, in order for those UVXY calls to work, you need a lot of time, and you need this correction to be sharp, and it cannot be wasting time like this. It cannot be pulling this kind of stuff. And now with this move, forget it. That's why they're worthless, especially since there's only a couple of weeks left in them. They're completely worthless, right? I mean, you can get them, I think one of them is worth like 10 cents. I got out when it was like still worth 60 or 70 cents. All right, so, and I sent that to our members, by the way. All right, so that's my question there. That's my answer to that. I would actually rather buy the shares outright, or consider, if you want to play that aggressive short, consider buying puts in something like AMD. It's probably, well, it's going to be more expensive, obviously, than doing calls in UVXY, but something that is more tied to the market, where it's a little more, where you don't have so much working against you as far as the theta decay goes. Okay, so good question. Let me see what else I got here. So let's see. I'm going through the chat. Andre, take a look at ACAD. Okay, ACAD. Let's see what we got here. So it looks like it's a pharmaceutical. Okay, big gap. Obviously, some news or something, right? You got this right here, if that's real. In this situation, I would leave it alone, because when you have a gap like that, there may be some follow through of that momentum. I mean, this thing went from, it closed at 46 one day, and then it went to 26. Maybe that's not a gap. Maybe that's a splitter, a reverse split or something. I don't know. I don't know what that is. But I would leave this alone right now, because you're in an attractive location, but there's no structure here at all. There's nothing here. All you have is this little attempt at a push higher. There's no double bottom. There's no higher low. It didn't, it needs to do better than 3 bars. So I would wait a few days and see how this thing stabilizes before considering a long, because I wouldn't want to be short at this area. Look where you are. I mean, this goes back to a year ago. The lows, this thing's slightly lower than it was a year ago. And, it's probably going to attract buyers. So not a great place to be shorting, in my opinion. If you're going to short anything, you want to be shorting near a high or near a resistance. As far as buying, not enough information there. So thanks for bringing that one up. Anthony, DXY, higher low forming. Should we pull out of some gold? Okay, so good question, Anthony. Let's take a look here of gold, of DXY. So I talked about this, right? I said, okay, it's early to judge the dollar index as being in a new trend, but it might be, all right? Bearish trends don't take out resistance levels, as we know, and it took out a resistance level. And it also formed this higher low over here, which is the, 90 area. Okay, so that's all cool. Now, the question about this situation is, what does this thing do now, okay? At this moment, while it looks like it could turn out to be a higher low here, this candle closed weak. So I don't see a pin bar, I don't see an inside bar, I don't even see a green candle. So I would be expecting the dollar to at least push a little bit lower back into this support area. We have to see how it behaves tomorrow and into early next week. If we get the reversal candle somewhere in that area, okay, in the mid-90s somewhere or whatever, then that could be the higher low. So to answer your question, Anthony, if you have too much of a exposure in gold, then yeah, you should probably take some off now, okay, while you have the chance, while the dollar is pulling back a bit and giving you a chance, especially with that pin bar that we saw in gold. So you should definitely take something off. Again, you can always get back in, and even if it's a small loss, at least you're reducing your exposure. Remember, risk first, all right? I know it's no fun taking losses, I understand, even if it's small, but small losses are the best losses, all right? When you get overexposed, you become at the mercy of the market, not a good position to be in. So you're better off just taking some off and being much more comfortable. If the dollar goes back into its bearish situation, meaning it starts taking out the supports, you can always put some more of that position back on, okay? It's like you're just managing inventory, and sometimes you're going to be taking losses in that. You don't want to be overexposed anyway, right? Like my situation with wheat and precious metals. I could have kept buying more and more and more, but once I reached my target allocation, that was it. I said, okay, I'm only going to invest this much money, and that's it. It doesn't matter if wheaton goes to $20. It doesn't matter if it goes to $5. It doesn't matter where it goes. Once I'm all in, the only thing I can do is sell this thing when it goes higher, you know, and that's it. 'Cause if it keeps going lower, it's not going to really, I'm not going to lose any sleep over it because I've set my position carefully, right? So that's the lesson that you need to learn if you have too much on in this situation. So definitely take this as an opportunity to reduce exposure. Even if this turns out to be wrong and the dollar goes all the way back to 89, why did I get out for? It's the behavior over time that will produce the results. So what if one time, yeah, you would have made more than you would have, whatever. I mean, we all have that story, right? It's about producing the same effective behavior over and over. That's what carries you along in this game, not one-offs. Okay, so thanks for bringing that one up. Komsky, okay, no problem. Hey, Sirhan, can you check BCH? You think we're on the right shoulder? Okay, BCH. So let's take a look. Now, BCH, yeah, there's been other ones that look similar to this, like XRP. I was commenting on this the other day. And yeah, this is definitely what your coin should not be doing, okay? With Bitcoin on its highs, on its all-time highs, trying to push them, right? This thing is struggling at a potential resistance area over here. What is this higher? The 600 area, the low 600s. If this thing was strong, relatively speaking, it should be up here, okay? Just like we saw Ethereum the other day, Ethereum was doing what it should be doing. Many of these altcoins are not. This is relative weakness. So if you're in this, this is an opportunity to reduce risk. This is definitely not a time to put on more. Or I should say, it's very risky. Now look, I could be wrong, and maybe this thing plays catch up, but more times than not, when you see these situations, and if this turns into that right shoulder, at this point it's possibly a right shoulder, but it needs to take out some of these lows, right? It hasn't taken out any candle lows yet. That would confirm it more, but the real confirmation really comes when you take out this support here, which is around the 450 area, 440 area. You take that out, then the head and shoulders is in play. And most likely I would be expecting Bitcoin to be pulling back significantly, you know, to see that type of action. So that's when you see this, this is a warning. And look, XRP probably looks similar. Let's say XRP, USD. Oh, look at this piece of garbage. This is garbage. This is what your altcoin should not be looking like with Bitcoin on its highs. Okay, and so if your coin looks like this, that's a warning. And most likely this is a chance for you to recoup some of your money or whatever. Okay, again, I'm sharing this information for educational purposes only. So you have to take responsibility for your decisions, but I'm just sharing with you my perspective and how I've seen these things behave relative to Bitcoin over these previous few years. Okay, so that's that one. Thanks for asking. And let's see, what would you say about FATE? I'm in from lower level and took risk off the table, but now I'm thinking of selling it all. Okay, so let's see. So this thing is range bound, okay? Range bound, and you came off this failed low. So nice hold, and you've locked in profit, nice hold. So at this moment, you have a strong candle, right? This thing is closing here in a few minutes, about 20 minutes, and it looks like it's going to close strong. All right. So at this moment, there's no reason to sell it all right now. You do have, you're going back into the middle of the range. Maybe you want to give this thing a chance to see if it can reach the high of the range. One thing you can consider is a trailing stop, which would go at this low over here, 88, basically like the 88 area. Once this candle closes, you want to go 2 bars behind the most recent candle, right? So once it closes, 2 bars behind would be the 88 area. And then just trail that stop and see where it takes you out. Maybe this thing will just keep going. If we have a pop tomorrow in the NASDAQ, maybe this thing will pop a little higher and it'll just give you some more profit potential. The thing is, if you do a trailing stop and you put it at, such a steep price, when you do get stopped out, you're going to give back a sizable amount, a decent amount of what you could have had. That's the trade-off, right? So it's an important thing to understand about trailing stops. There's no perfect way to time the top of the market. The only way you're going to get close to the top is with a predetermined limit order that like a price target that you put out there and hope that the market reaches it. The market may go higher from there. The market may not reach it, but the outcome of that is going to be more random. But that's the only way to really do it, and there's no way to pinpoint that area. You can find inflection points where there's a potential that it may turn, but there's no perfect way to do it. Okay, so thanks for bringing that one up. Thanks for asking. Okay, let me see what else we got. And you said your target's 100? Yeah, I think you could let it go further than that. I mean, I think you could give it some room into like the low hundreds, because at this point, or you know what? Here, consider this: sell half of your position if you want to put a limit order for half of it at 100, and then just let the other half ride. Right? It's all profit anyway, so why not? And then you get some more experience out of it. Okay, so let's see what else we got. AMD, DJ, AMD 70, buy put, October 15, $5.50. Okay, so AMD. Now, so AMD is relatively weak. That's why I'm picking on AMD as far as buying puts. Yeah, 550 is a little high, but you're talking about October, which is that's a decent amount of time, okay? Because most likely, even if AMD doesn't make a lower low, it's likely to test this low in the market if the market pulls back. And as we know, the market is near a peak, and this thing is nowhere near its peak. So when the market turns, this thing is probably going to get ugly pretty quick. All right, as many in its sector will. So the thing is with that, DJ. So if you once you pick an option like that, okay, you're saying so the October 70 strike. Where is that? Let me see. So yeah, okay, that's in this area here. You want to wait until the market really. You want to get it when the market looks its strongest. So that $5.50 premium will probably be more like $4, maybe $3.50. If you can get it for something like that, you have to wait, because the market right now is not showing any sell signals just yet. So yes, it's at a peak. Maybe it can go a little higher. Maybe you can find it intraday where the market's kind of pushing but then kind of gets stuck. Maybe this would be good for tomorrow, like going into the close. Why not wait until at least there's some sort of hesitation, at least maybe an inside bar or something, right? See if you can get a better price on it. But it's a good starting point. Or maybe it doesn't have to be AMD. Maybe we could find another stock, maybe something like Qualcomm. Look, Qualcomm's in the same situation. Oh, it's a little, no, forget it, too expensive. The price is too expensive. Something that's tightly linked to the NASDAQ that's cheaper, okay? AMD was just one I picked off the top of my head, but I'm sure we could find one out there that follows, the semiconductors more closely, where you can get cheaper puts, and that will pay off on a sell-off, NASDAQ sell-off. Okay, so thanks for bringing that one up. Let's see what else we got here. FNV. Let's see. So this is very similar to a lot of these other ones, except many of the other ones at least have a bullish trend. This thing does not. Okay, this is not. Let's go back a bit and see what's going on here. All right, so relative to the April low, okay, this broader formation, we can say it's a corrective move because it hasn't taken out that April low. All right, that's fine. But the momentum, this thing has been taking out supports and taking out supports, and now you have this push higher. I would not touch this in this situation. I'd be looking for another lower high. Okay, and now the next test of low or higher low, right, in this area here, would be the place to consider it long. Not now. This is the worst place to be considering it long, because look, you're up against this old support, which is likely to act as a new resistance. You're going right into that. So I would not go near this thing as far as that goes. And I don't like this elongated corrective move. Like, yeah, we can argue that the overall trend is still bullish relative to the April low, but man, since like August, this thing went from like 164 to 104. I don't know. There's better charts out there. Okay, so that's how I would treat that one, if that's the correct one. FNV, FUTU. Again, if you're talking about coins, just make sure you put USD after it. All right, so FUTU, FUTU Holdings. All right, so here's a much better looking chart. Nice, strong trend, right? Clearly strong, and it moved quickly, right? Off of January, this thing was at what, low of 30, 38 and a half, basically. Went as high as 203. Yeah, that's a mover. Okay, wow, in like 2 months. Okay, much better choice. Now, since then, it's been correcting. Okay, fine. We have a higher low established at 122. Okay, that's cool. Now, let's see where we are now. This thing at this moment is not a good price to be buying this, not for a swing trade. You're up against this resistance, and you know you can easily fail over here. I would not chase this. So what you want to see in a stock like this, you know, you have there's a lot going for this stock from a technical perspective. Like I said, you have the trend, you have this consolidation area, but trying to buy that consolidation breakout is higher risk compared to buying a retrace to the range low. Now, I don't know if it will retrace there. There's no guarantee, of course. The thing is, if it does, that's your opportunity. If it doesn't, well, then you can perhaps take a smaller position and try to play that breakout. The smaller position will compensate for the elevated risk. But man, this thing moves, so if you get caught in a fake out, it's probably going to be expensive, right? So I'd rather have more in my favor, more probability. I'd wait for this area, okay? So the low is like that, those 120s. May not touch 120 exactly, but if you're in like the low 130s, high 120s, and you get a reversal there, that's where the reward risk would make the most sense, okay? And probability be on your side. So thanks for bringing that one up. Definitely a good one for the radar. FUTU. Okay, DJ, please use USD. Okay, cool, right. So Andre, C-A-N-G, Kang. What's the story here? Kango. So this thing looks like it's sporadic, right? It has these periods where it does nothing for a while, and then it pops, right? It pops, you get a little pop right now. When it does a pop, when it does something like this, if you're not in this, then there's nothing to do. If you're in this, you should take something off the table as it starts retesting previous levels, especially the middle of the range right in here. What is that? Around the $12 area? That's the ideal place to start taking something off the table. If you're not in it, don't bother. The risk is too high, right? The closer you get, the closer you get to the middle of the range, the more of a 50-50 type of trade it is. It might go higher, it might go lower, but there's really no way to get probability in your favor there, right? It's too random. So I would wait, just like that other one we just looked at, FNV or FUTU, whatever. I think it's FUTU. You want to see if it can retest the low, or maybe not the exact low, but perhaps you can get a higher low out of it, okay? Which would be ideal in this little gap area, which is around 9.5. Okay, so if you can get like 9.5 or something, and again, you get confirmation. I'm talking about this from the swing trade perspective. I'm not talking about this from an investment perspective. Okay, so you need to know the difference. Swing trades have specific orders: a buy stop, stop loss, targets, a very specific reward risk, and typically it's all in, all out, right? We're not talking about building positions here. So so that's how I would treat that one. So that's an interesting one. but you've missed the move. Like if you didn't get it at the low here, like I said, don't chase it. Okay, thanks for bringing that one up. M failed low. See that situation right there that I just highlighted with that box? That is what you want to see for something like, you know, Kang, something like Futu. That's ideal. You want to wait until it gets into the situation. And when it gets there, it looks ugly. People think it's a break of support. People bang it out. People get margined out. People short it. But that's actually an opportunity in something that's in a broader bullish trend, which is what this is. So as far as that goes, I like the general structure. Now, this movement that we've had since the peak back in January, this is a consolidation, right? It's a corrective move. So, and now if you're buying this now, you're going right into the range high of it. So I wouldn't touch it now. You need to wait for now a test of support of some kind. That's the more effective thing to do. And support is around 85 and a quarter, around there. So perhaps, you know, 85, 86 area. And the price alone is not enough. You need to see a setup there because, you know, price can easily test some level and fall through and just keep going, right? So a lot of people, they just want a level and they ask for a level. Hey, what level should I buy Bitcoin? What level should I buy this? And we can't just give a level because, oh yeah, buy it at 86. It may go right through 86 like it wasn't even there. So the level needs to prove itself, right? And that's where the setup and confirmation come in. So that's the area. So, but my point, the reason why I'm bringing that up is because when a trade idea comes together, you want to have a location in mind first. But that's all it is. It's just a location in mind. It's not a place to put on a trade until the price action proves itself. Okay, cool. Thanks for bringing that one up. I like that one. I'm going to put that on the radar too. MNST. Komsky. Clove. Holding bags from $10. Worried just to go back. Okay. So Clove, is that a stock? Let's see. Let me check I get behind in this chat. Let me just make sure I'm okay, making sure I'm not talking about wrong symbols here. All right, so Clove. So you're in from $10. Oh man. All right. This can happen, right? This kind of stuff. It has like these nice pops and then everyone piles into it and then it just turns to garbage. It happens. So the way to prevent these type of situations, for one, is you don't want to get too big. For two, you know, if you're managing inventory, this is why you have to have a limit on the inventory, because if it keeps doing this, and I don't recommend inventory on garbage cheap stocks. We usually don't do that with, you know, like when I say garbage stock, I'm talking relative to like a good stock, something like Google, Amazon. You know, those are stocks that we can agree. Tesla, you know, we know those are high quality, high profile stocks. Many of these are not. So playing the inventory game with a lot of them is usually not a good idea, okay? Unless they're paying dividends and that kind of stuff, which, you know, adds to their value. Anyway, so in this situation, also this is where stop order can, you know, be of great value, saves you a lot of money. Now, to answer your question, just getting back and bounce off of $10 now. So let's see here. $10 is right around here. All right, here I'm going to just highlight $10 on the chart. $10 is right about there. Actually, no, hold on. Let me just highlight the $10 price right there. Okay. So going back up, bounce off 10 now. Well, all right. So here's the thing. You want to give it a chance and see if it can get you back up there, and perhaps you can, you know, get out for break even or start reducing risk. You can try that. I mean, at this moment, there's no sell signal. Yesterday looked a little funky, but we're closing strong today. So, okay, fine. You can give it a chance if the market follows through. You can also use this as an opportunity to maybe lighten up on some of it. So let's just say if you have 100 shares, maybe you just get rid of 20 shares or something just to reduce that risk a little bit. And yeah, so if it keeps going and you have a chance to break even, why did I get out of those 20 shares? I shouldn't have listened to that guy. But the thing is risk. What if this thing goes almost to 10, you don't get out of any of it, and it turns and it goes back to, you know, what's this low here? $6 or whatever, right? You're like, why didn't I get out? So it's all about risk. And this, especially in this situation where you're in the red, at this point, forget profits. It's just about managing risk. So if you have an opportunity to get out of some at a better price, it's usually a good idea to take that opportunity. Again, just some. So a lot of people, they over exaggerate, and you know, I say get out of something, and so my whole position? No, not your whole position. A few shares, okay, just to reduce the risk. And if it keeps going higher, great, you know, hopefully get to break even. But at this point, I would not have hopes high for this thing, because this thing's in this is a bearish trend, because we took out the supports back here. Shouldn't have taken out that $10 support. So that's not good. Most likely 10 is going to be a resistance now. Okay, so I would definitely not be buying more into that. Okay, so just look to reduce your risk. Okay, cool. Thanks for bringing that one up. Let's see what else we got here. UVXY 15 days losing 50% of value. Yeah, DJ, like I know that's the thing with those, right? And with the market doing what it's doing, it's like, you know, you have to be very careful with those. They're high risk instruments, and you know, I don't know what to tell you on that one, but that's the deal. That's why I got out of my options, and that was that. Didn't get back in. I'd rather get into something a little more stable. Okay, Nita, could you please look at LI and SKLZ? Thanks, Nita, for bringing it up, because I remember you mentioned that in the chat and I forgot. Here's LI Auto, and obviously I sent out a trade a little while back. I think this one got stopped out, right? The stop loss is at 28.5, and this thing went below 28.5. That was like back here somewhere. Anyway, yeah, not all these trades work, right? But the stop loss, this is a nice example of how stop losses save you money. If you bought this thing at like $30 or whatever, right? And you take the loss at 28, which is like right around here. This thing is at 25. This thing went as low as 19. So, you know, stops save money. They do. I can't tell you how many examples of that I have. Anyway, all right, so as far as a trade, not a good place. First of all, the pin bar and all that stuff occurred here. This was a few days ago. You know, a few days ago we were talking about like buy signals appearing in places, but we can't take them all. We're not going to take them all. We don't want to be overexposed, especially with the way this market is acting. So in this situation, at this point, like some of these other stocks that I looked at, you'd be chasing it. Can't chase it here. Not a good place to be buying for a swing trade. And as far as inventory goes, I'm not a big fan of these EV stocks. You know, if you're gonna get involved in one, I'd say a small allocation, unless it's, you know, Tesla or something, which even then, there are people that think it's going back to 300. So, you know, to accumulate inventory in those, you really need to wait until those rare opportunities, and they're rare. You know, Tesla was at 600 the other day, and now it's basically back to 700. Tesla went as low as 530 or something like that. Was that one of those rare occasions? Not as rare as like a 400 or 300, which can occur maybe once a year. That's how rare we're talking about, all right? So that's why you want to have money on the sideline, just for those rare occasions. And the market will look horrible when you step in front of something like that. Anyway, but to answer your question here, for a swing trade, no. I would wait for a pullback of some kind and high or low for a swing trade, all right? Because you're getting into resistance now. You're getting near resistance, and you're sort of like in the middle of this range. So I would leave it alone for now, okay? And like I said, with the stock market the way it is, if the stock market peaks, this thing will turn into a lower high, and it won't be pretty. And SKLZ. SKLZ was the Henry Rains call, okay? Henry, we sent this out as trade of the week a few weeks ago when Henry came back from his buying all of his houses or whatever he was doing. And like the next day or two, and this was right before the Super Bowl, NFL announced the deal. Great. That one worked out real well. They don't always work out that way. Look what happens after, okay? This is, again, why we always, whenever I see something go vertical, you know, if you get into the habit of buying it while it's vertical because you made money the other time, this is eventually what you're going to get caught in, okay? You're not going to be able to avoid this. And then you'll be like, oh, man, how do they get caught in that? The market sucks. It's not the market. It's the probability, right? You just don't buy into stuff like this. So here we are at a much more attractive location, all right, than buying into those highs. Current price action, you have this outside bar. So this is a good start, but there's just a couple of warning signs. You have a lower high right here, which, you know, that's whenever I see a lower high, I'd like to see more stability before I buy into it. What is that? Well, a double bottom or high or low. I'd like to see that, okay, rather than a single reversal candle. Single reversal candles are usually good when you give a small pullback, right? Nothing like this or something with a lower high clearly established. So what are we looking at here? $23, maybe, so 23, 24, something like that. We have an outside bar right now, but what I would like to see is an inside bar or maybe a pin bar develop in that area. That would equate to stability, and I'd be much more interested in a swing trade at that point. So I would definitely keep an eye on this. Again, keep in mind, these things, it's been acting relatively weak. The NASDAQ and S&P, well, especially the S&P, is on its highs. So what if the S&P peaks? These things are going to feel it, even though they're not all these things are highly correlated. But when there's a huge, broad sell-off, even some of these garbage stocks that don't have high correlations, even they feel it. So just something to keep in mind, right? It's always a good idea to just look at things relative to the broader market. So thanks for bringing those two up. DJ, I thought about buying UVXY outright, but don't know my target levels. Should I take 50% of the shares at 20% and then sell the next 20% shares at 30% hike in UVXY? Stare at my screen. Okay, I understand. Well, look, see, UVXY, it's tricky, right? The reason is, since it's like a derivative of a derivative, it's hard to use. You can't rely on this chart. We can't sit here and say, oh, look, a pin bar, oh, bearish trend. It doesn't really mean anything because it's really all about what the VIX does, okay? So in these situations, what you have to do is you have to look at your risk, right? So if you buy the shares outright and you're risking $1, that means you should probably take money off the table if you're up $1 or $1.25. And then, the next dollar, so if you're up $2 or $2.50, you should probably take your next one off. And then if you're up like $3 or $4, then you should take the rest off or see if you can let it run from there. You have to look at it as a function of risk instead of staring at a chart and because it's really not going to be very helpful or useful. Thanks for mentioning that. DJ, what do you think of VMW for a short? Okay, let's see. DJ is very bearish. VMware. So let's see here. Okay, this is interesting. Look at this long price range. You don't see many of these days. I mean, this is a really well-defined range-bound market going all the way back to like June. Okay, and the high part of the range is around 150. Okay, and the extreme high part of the range is around, what is that, 154, 155? This area here. That would be like the failed high area. Currently, you have a bearish pin bar at a resistance. Okay, I like that. That all makes sense. Okay, off of this little minor resistance area. So as a short, plus with the position of the NASDAQ and S&P, that all makes sense too. This thing's at a resistance while the market is potentially at a peak. If that market turns, this thing should be pretty much, it should reach the middle of the range at least relatively quickly. 137 area, 140 area. These puts might be expensive though, but hey, I like the idea. It's range bound at the high of the range. Right. So now this is an individual stock. I don't like individual stocks, but I am willing to make exceptions for stocks that like something like that's tied to the market or something like, what is this? I mean, in this situation, how often does it really gap? Because you have to watch out for the gap risk. I mean, just looking back, right? I mean, look at a lot of these gaps have been bearish gaps. So that actually might be a good thing. There's some bullish gaps in there, but that's one of the risks you have to watch out for shorting a stock outright. That's why I prefer the options, because at least the options, your risk is limited. That's one thing. And that's also why we prefer the index, right? But in this situation, I'd be open to it, okay? Because I'd like, if you can get cheaper options relative to like the Qs, I'd be into it, okay? So, but nice structure, nice setup. I definitely like it, DJ. It's worth a try, okay? It's worth the risk in my opinion. POW, RYTM. How you doing, POW? All right, Rhythm Pharmaceuticals. All right, so let's take a look at the bigger picture. We have, this is a bullish trend, higher lows, higher highs, okay. We had this higher low here, then this higher low was taken out, all right. We have a lower high over here, and we have a head and shoulders pattern, very clear, very distinct. All right, now since then, it's been, the momentum has been somewhat bearish. Would I call this a bearish trend? Well, relative to the previous move from the December low, it's not a bearish trend just yet, although it is taking out supports. So this is tricky. All right, you have a resistance ahead of you. So at this moment, pal, I would not get involved in this one. I would like to see how it behaves around this support level right here, the $25 area. Okay, see if it could maybe pull back and give you another entry, maybe a pin bar, something where your risk can be really nicely defined. And, because you do need some more structure in this thing. You are in, look at this, you are in this gap area here. See this gap area? Gaps tend to act as support or resistance. And look, you're fooling around in that area. So you have that in your favor. Okay, I like that. So this, maybe an inside bar would be good, or something, okay? But I wouldn't chase it. That's all I'd say. I mean, if you buy this thing right now at $26.76 and you put the stop at 25, that's about $1.50 right now, $1.50 of risk. And there's potential here. You can easily make more than $1.50 if this thing goes. So not a horrible idea. Not a horrible idea. Definitely keep this one on the radar. It's just I like to see some specific setups, and it's just not on this one. But the reward risk isn't bad. Also, I was going to mention, I was thinking about you the other day because I was looking through my stocks. Remember, not Sundance Energy. What happened there? Snyder. Remember Snyder? SNDR. I was like, oh man, I wonder if Pal got this one. You brought this one up. Anyway, we don't think we ever did anything with Snyder. Sundance, man, I sent that one out. That one didn't work out very well. Look at that. Oh, stopped out. Stop loss at 255. This thing's at 166. That's why you got to respect the stops. Okay, anyway. So thanks for bringing that one up. Let me see what else we got here. Rebecca, USEG. Okay, so I'm assuming that's a stock. Let's see here. If it's not a stock, let me know. Just make sure you put USD after it. Okay, so this one. Ooh, I don't like this price history. It's just really, it's not very active for one. I mean, you have that spike. I don't know what that big spike is all about. I don't know if that's a bad tick. I don't know what that is. But you have a general resistance in that area here, and you're fooling around like here. That's sort of near support. Here's the thing, Rebecca. There's just many charts out there that are much better looking than this. Okay. At this moment, I mean, you're fooling around in the middle of the range. You got a bearish pin bar. This thing may pull back a bit. I mean, this thing's just trouble. Okay. It's cheap, but it's trouble. I'd rather pick something like POW, just Rhythm, RYTM, and let's just compare the two, right? RYTM, look at your stock and look at something like this. This thing has action, right? This thing has a nice support level, and this thing doesn't have horrible risk, and it has potential. This thing can pop up a couple of dollars at least, and you have something there, okay? As opposed to something like USEG, which is just, I don't know, you see the difference? So at least the other one had movement potential. These, if it's a short float stocks or low float stocks, low float, high short float stocks are very good candidates for swing trades because when they go, right? Like TLRY. When they go, they go. Typically, they look like they usually have a big pop somewhere in its price history. Oh, where did this thing close at? Up $4.28. Nice, nice. That was our trade of the week. Okay, so anyway, just wanted to point that out. Thanks for bringing that up. Let's see. DJ, options all about the timing. Okay. Yeah, so, I mean, DJ, again, like I said, I'm going to be looking for some cheap options. If I could find something more relative to a market stock, that may make sense. But I want cheap options. All right, and I want to buy like 6 months. Andre, just for info, FNV is a gold royalty stock. It's just interesting that it's starting to take off. Okay, a gold royalty stock. So do they basically pay, they invest in the mining and then they get a piece of the action, kind of like WPM? If that's the case, what they call those streamers or something, that's cool, and if gold goes somewhere, which it technically should start to go, then this thing is probably in good shape. But like I said, I wouldn't chase this thing because, as we know, gold has that pin bar in it, and then these things can get funky again. How many times did, I was telling people, buy WPM, buy WPM, and WPM, was not very comfortable, right? WPM, I mean, look, this thing was not fun to hold on to. Okay, I'm in it, but, again, it's kind of the same idea. Looks similar, too. Looks similar. Okay. BNB USDT. Avi. Okay, let's take a look. BNB. Oh, so Binance Coin. USDT. Binance Coin. So Binance Coin, I know it's a wild one. And yeah, look, I mean, look at that move, right? Nice. Since then, right, consolidation, pop, higher low. See this higher low right here? This is what, when you're coming out of a consolidation, or when something starts to go and you miss that initial move, that's okay. This is what you want. This is what you want to see, okay? This is what you want to see after the initial move. That's ideal if you can get it. The market doesn't always deliver that. But anyway, as far as now, this thing's on its way. And it seems like it's in line with Bitcoin, which, Bitcoin's trying to push its high. This thing is near its high. Okay, that's acceptable, but I wouldn't buy it now. Not as a swing trade, definitely not. You're near resistance. You have a pin bar developing here. So if Bitcoin fails to follow through, this thing's just going to go back into inside of its range. Now, I know Binance Coin, they have a lot of things going on to incentivize holding it. Like, I know Alice talks about that a lot. And that's good. That's if they give you a reason to hold it, and if they're going to pay you in some way to hold the coin, and you want to build inventory in it, okay. So you can build inventory at any price. You just, when you're near a high, you should take less. So, like, for example, if you were going to buy, I don't know, if you were going to buy 10 coins, right? That's your maximum position size that you want to invest in. You're going to buy a fraction of a coin here, maybe a half a coin, maybe an eighth of a coin, something very small. So if it pulls back, then you have some, then you can invest the rest of that proportionally. Anyway, but I'm not a big fan of inventory with a lot of these altcoins for obvious reasons. As far as a swing trade, like I said, not at this price. Wait for a pullback, wait for a setup. Support at this thing right now is around 220. It's unbelievable. This thing had an unbelievable move, but it can give it back just as quick. So just something to keep in mind when the Bitcoin party is over. And I don't mean a bear market. I mean just a broad wave for a lot of these things are going to feel the pain. Okay, we don't have evidence of it yet, but I would be very cautious. So thanks for bringing that one up, Jay. Hi everyone. Hey Jay. What do you think of GE? A bit of meh news, but wondering what the price action. Okay, so GE. This one, I know Andrew's been a big fan of this one. And this one's actually been a clean energy stock. It's been a clean energy play, or an energy play, because they're like the leader in energy. Now, this thing's had quite a move, all right? Interesting. So it's a huge stock. I mean, they're never going out of business. Talk about high quality stock. Higher lows, higher highs, okay. Whatever news knocked the wind out of it, okay, fine, no problem. This thing is what, 96 cents today, minus 96 cents. It closed at 12.29. Let this thing stabilize, okay? Now, this is a stock that is a good candidate for inventory, all right? They pay dividends. They're a high quality stock. They've been around forever. They control the world practically, right? So in a situation like this, yeah, you can buy small shares for inventory. It's only a $12 stock. I mean, Andrew's been buying this thing since it was $6 or $7. When people hated this, like, gee, what? Right? It was like Kodak. People didn't even realize they were still in business. I'm just kidding. But the point is, he's been buying it since those lows because no one ever saw that. That was like 2 years ago. So that's the kind of play that you're looking at with something like this. Again, in this type of situation, you take a small bite. So if you were going to buy a few hundred shares, you buy 10 shares here or 15 shares, right? As part of your 200 or 300 share total allocation, you take a small bite. Otherwise, this one's not a great candidate for swing trades. I mean, look how this thing's moved so slow compared to some of the low float, low inventory stocks. I mean, look at this, $10. It was $10, what, a few weeks ago, a month ago, whatever, $13. Like, that sucks. $3. Sure, if you have 100,000 shares, it may be worthwhile, but come on. So, well, good for long term, not the best for short term. It's like watching a snail paint a house and then watching the house paint dry. So forget that. Yeah, so I would just wait, you know, as it pulls back. Now, this is a market stock. So if the market has the pullback and the pullback hasn't even begun in the market, then this thing will probably feel some pain further based on what I'm seeing here. So just a few things to keep in mind. Your next support on GE is around this 1160 area, somewhere around there. This consolidation area is where there's support. All right, so you have to see how it goes from there. So thanks for bringing that one up. Some outlook there. DJ, okay. Oh, bought some GE at 1214. Thought it was, well, it is on sale. So, okay. So DJ bought some. Cool. Not a bad, like, again, it's not like you're buying, you know, some OTC pot stock. Okay, Matt, PLTR. I appreciate, oh, cool. No problem. No problem, Matt. I appreciate that. Okay, let's take a look. PLTR. I'm glad people are getting things out of this. I know some people make money off of these. You guys should be paying me a commission or something. No, I'm just kidding. All right, so Palantir. I'm going to wrap this up in a few minutes, but I think I got most people's questions. So this one has been on our radar. Andrew talks about this one a lot. You have this nice higher low, right, that developed recently. You have the, I'm sorry, not higher low. The higher low is back here. When I talk too much, I just start to, you know, go into a daze. Okay, you have this double bottom situation right here. Price is on its way, right? Obviously following the NASDAQ. Can't chase this. Can't chase it. Leave it alone. Let it give a better setup. You're going right into this resistance area right here. That is the 29 and a half area, something like that. So I would not touch this. If you're in it, then hey, let it do its job. See if it can get to that resistance. Take some money off the table, right? Reduce risk. But don't, this is a tough spot. This is a 50-50 spot. It may go higher, it may not go higher. The higher probability, wait for the higher low. Just like we looked at in that stock, like 2 stocks ago, right? Or Binance coin, right? That higher low situation that I pointed out, wait for something like that. Or if it doesn't do that, maybe it goes lower and gives you a double bottom. Those would be the better situations to get involved in something like this. And of course, assuming that it provides a setup, because it may touch the level and go through. Remember, there's a lot of randomness in these things. So not a bad one for the radar, but I wouldn't touch it now. Thanks for bringing it up. Okay, DJ, options are expensive on VMware, but I want to give this, okay. All right, well, I mean, DJ, if the options, sometimes if the options are too expensive, perhaps you can either do small shares, right, as an alternative, small share size. You know, like what's wrong with buying like 1 share of Tesla, right? You could do pretty well with 1 share of Tesla. Isn't that ridiculous? Or maybe you can consider, since you're knowledgeable with the options, maybe consider a short option, right? A short call, or maybe a short a bear spread, a call bear spread, where you short a call and then buy one higher to protect yourself. You're going to make a lot less, but those may be some considerations. So at least you're capitalizing on the expensive premium as opposed to paying for it. All right, cool. Thanks for bringing that one up. Okay, no problem. That's okay. Cool. What do you think of EOS BTC? All right, good question. So these coins, like these cross pairs, right, against Bitcoin, I don't like these, and the reason is they're so unstable. Look at this mess, right? Lower highs, lower lows all over the place. Why is this the case? Because Bitcoin is appreciating much faster than the value of OES, right? So I don't like these. Oh, I'm sorry, not OES, EOS. I don't like these for that reason. It's like trading a Forex cross pair. You need to trade them against something more stable. Now, sometimes you don't have that choice, but like EOS against the USD, right, or USDT, I mean, look at that. So at least that's not a bearish trend. Why? Because the dollar is stable. So here's the thing. Even in this case, this thing sucks, right? I see a lower high right here. Yeah, we have pin bar today developing, but this thing should be doing much better relative to Bitcoin against the dollar. This thing should be doing much better. So I don't like this thing at all. I don't like the lower high. So that doesn't mean it won't change and at some point improve. But before it improves, I want to see better structure. Double bottom, higher low, something. There's nothing here but lower high, So I have nothing there that says it wants to improve yet. Okay, so just something to keep in mind. But again, those cross pairs, yeah, like I said, they're such a pain. Okay, if you can, or if you have the opportunity, try to avoid them. I know not everyone can. Not all coins trade against the dollar or Tether or whatever, but they're a real pain. Okay, another look. XLM is another one. Look, XLM BTC. Look at this mess. Look at this. It's ridiculous, right? But if you look at XLM against the dollar, I mean, it's not as bad. Doesn't look great. But what's the problem here? The problem is Bitcoin is improving or accelerating faster, and XLM is not even accelerating. It's pulling back, which means it's going to push that crosspair chart even lower faster. That sucks, you know, so forget these crosspairs. So that's the thing, keep in mind. If you're going to trade against something, try to pick something stable like Tether or some stable coin or whatever that doesn't really move. That's the whole point of that, so that you're not caught, you know, with something going on both sides, which makes things complex. So thank you for bringing that one up. It confuses a lot of people. Yeah, Shubham, yeah, BTC is the first thing I covered. So if you go all the way back to the beginning of the video, I talk about Bitcoin. Been day trading for a year straight with profit. Where should I learn options? Well, okay, cool. So you've been doing good with day trading. Day trading is very hard, the hardest place to start. Good question. Nothing to be scared of with options. Options are actually, I have to say, options are easier relative to day trading, and it's easier to make money with options once you understand them and understand how to control risk with them. So we have some webinars. If you come to our site, we do have some webinars in our webinar library where we explain basic options, calls, puts, and our strategy, you know, our basic strategy. We don't do anything complex, right? Complex options are as complex as you want them to be. They don't have to be. Pretty much all we do are straight calls and puts, right? And mostly calls. And you know, there's just certain things you need to know, like how far out of the money and how much time you should buy and what variables are actually moving that price of the option. So you can check that out. Check out some of those webinars. That's one place, right? They're free for our members. Otherwise, I mean, there's lots of resources on the internet, right? And there's books if you just Google that stuff. There's also, actually, I was going to say I have a webinar here on YouTube, but that's actually placing option orders. If you don't know options, then that webinar won't help you. All right, so anyway, I hope that answers your question. Don't be scared. There's no reason to be scared. Educate yourself, and it's going to take you some time. In fact, one of our members, Michael, he was learning options, and I found this paper trading site called, oh, I can't think of the name right now. It starts with an E. I forget the name of it. Anyway, I covered that in my options webinar here on the site. Etna Trader, it's called. Etna Trader, E-T-N-A. Etna Trader. It's a free platform where you can actually paper trade options on delayed data. So at least it gives you a feel for how the options trade and all that kind of stuff. And Michael really got a lot of use out of that. All right, so you can check that out. All right, anyway, let's see what else we got here. Shedem, can someone tell me Bitcoin condition? Is it forming double top? All right, so Shubham, there's no way to know, right? I mean, it's possibly forming a double top, but right now the candle is strong. So if this candle stays strong, it's possible that we push through, but it's impossible to know right now until it proves itself. It's also possible that we get a failed high. So we can't think in absolutes. The thing is, if you're not in this, then this is not a good place to be getting in. Risk is very high, especially for short-term strategies. If you're in it, you know, like we are, you just let it run and let the market do its job because we're in it from a much lower price. And we have that luxury of being a strong hand. If it turns at some point, we can always make the adjustment, or at worst, we can break even if we have to. Okay, so a lot less to worry about in terms of risk in that type of situation. All right, but anyway, go back to the beginning of the video. I spend a lot of time. I spend about 8 minutes or 10 minutes on Bitcoin. All right, let's see what else we got here. All right, so I'm going to wrap this up here. I think I got everyone's questions, and man, I've been talking for a while. Yeah, thanks for mentioning that, DJ. Okay, cool. All right, is there any way to see options price charts? Well, Andre, that's a good question. Options price charts are pretty useless. I mean, you can see them on certain platforms like Interactive Brokers. You know, you can actually pull up an options price chart, but it's not going to help you. All right, because the option is a derivative of the stock, and because there's other variables that move the options price around, like time value, the charts are like all over the place sometimes. They don't make any sense. So like a pin bar on an options chart means nothing because it's really, there's so many other factors moving around. The pin bar on the stock means something, and it's going to affect the option. So really focus on the underlying asset, not the option when it comes to charts. Thank you for bringing that up. All right, so I'm going to leave it at that. Let me see. Yeah, it's 1:15. I've been into this. As you know, I can talk for 3 hours, okay, and I'm not going to do that. I know you guys have better things to do, guys and girls. So thank you all for your great questions and all of your participation. I always appreciate it. Again, if you like the video, please press the like button. Just let me know because it gives me some valuable feedback. Also, register for the channel so that you get a notification from YouTube every time we stream. And that's it. So just look, always be cautious. Don't get married to opinions and be slow to react because reacting is not helpful in this game. Anticipating is. So you should have scenarios figured out in advance. Okay, they could be right, they could be wrong. But the thing is, if the market confirms your scenario, then you can take action because it's pre-thought out, as opposed to reacting to something now, which is not good. Okay, it's ineffective. And if you get paid, it's a random payment. Okay, it's like gambling. It's like going to the casino and playing the slot machine. Why do people play the slot machine when you know you're going to lose? Like there's no such thing as a professional slot machine player. Meanwhile, people go into the market with the same type of mentality every day, thinking, oh, I'm going to win. What's the difference? It's still random, right? So that's something you have to keep in mind. You want to avoid that type of randomness, and part of that comes from acting or reacting on information that you think you know how to make sense of. Meanwhile, it's completely random. All right, anyway, just wanted to mention that, give you something to think about. So enjoy the rest of your day, everyone. Thank you so much for watching, and I'll see you next time. Thanks for watching.